Good afternoon and welcome to Real Wealth Network's weekly webinar. I'm Kathy Fedke, co-CEO of Real Wealth Network, and you've probably heard me talk a lot about this wellness center in Costa Rica. It is such an exciting, unique opportunity. I know uh, a lot of our listeners today are already invested in this project, and we have some people joining us who may be interested in investing and want to learn about the updates there and whether you'd want to potentially even own a property there. But I think, shoot, I think my internet here in San Diego, I'm in San Diego today, and I think it's pretty terrible. So I will just jump right in. And David is the developer of this project, and he's sitting right in the middle of that garden that you see. That's actually a garden, the picture you're looking at. And the center of that is the yoga studio. We'll have some pictures, but just to give you an idea of how beautiful this property is turning out, that's the Mandela Garden, and that is where David's calling to us from. So welcome, David.
Thanks so much, Kathy. Yes, I thought this would be an awesome place to share with the RWN membership. It's the first time I've done a presentation from here, but it feels amazing. So we are right in the center of that beautiful garden.
And that's kind of amazing too, to think that you've got such good internet there on the property, something that I'm sure you'll be discussing in the slides as to why this property has some of the best internet access in Costa Rica.
Yes, it does.
Yeah, this is today's presentation is not an offer to sell or a solicitation. It's educational. If you are interested in investing in this project, then you need to read through the private placement memorandum, which is the offer, and you can get that just by logging into to our website and go to the Costa Rica page under Invest tab, and you'll be able to get the documents to really understand the investment. But we'll be giving an overview today of that. And then just like any investment, all real estate, all investments are subject to risk, even possibly the risk of money invested. I mean, that happens in the stock market every day, right? So it's always a risk. It's important to understand that those risks are disclosed in that private placement memorandum. So you want to make sure you understand that. And of course, always run any investment by your personal accountant, your attorney, because if you hear legal advice from any of our webinars or tax advice, please don't take it as advice. Take it as something you should bring to your own advisors, something that you look with them, because everybody's situation is different. Okay.
All right.
We've got our upcoming live events, July 13th in San Mateo, July 14th in LA. We'll be featuring Jacksonville, brand new properties there in and around Jacksonville and Florida, Birmingham and Dallas. And then we'll also be answering your questions and giving a presentation on this one, Rise Costa Rica. I'll also be giving my mid-year report, and this will happen at both events. So hope to see you there. David will be there as well. And then August, we have our Eastern, it's not the East Coast, but it's on the eastern side of the US. We'll be in Cleveland. We have most of our affiliates coming out to that event on Saturday, August 10th, with a tour of Cleveland on the 11th. So that's in Cleveland. That helps a lot of our East Coast members not have to fly across the country and still go into one of the markets that we think is a great market for owning rental property today. So be sure to check that out. We'll go to the next slide. And there he is. Here's David. He is a California-based developer. He managed development of over $300 million in projects in New York and New Jersey, closed $5 million raise with our investors in phase one, and he's really assembled truly a world-class team for this project. So I'm super excited for him to share those details with you today.
Thank you so much, Kathy. Appreciate it. And I am, as Kathy mentioned, she's had even some of the members of our professional team on her show, and it's been exciting to work with them to bring this project to life. And I'm going to take you through a brief overview of the project, and we'll send you more in-depth details as about other key components. And then sort of a recent progress, things that are going on, so you can get a sense of the kind of the activity and the opportunity that exists right now. So I'm going to start with this executive summary, and I've just put in here that on the investor portal, there's more information about the project. You can also look at risecostarica.com as our website, where you can learn about more information there, as well as one component of the project that's actually already operating called Kinkara, Kinkara, and you can check that out at kinkara.com. We'll talk a little bit more about that in a moment. So we'll dive right into, basically, Rise is a new hospitality brand that sits on 4 foundational elements, and that is a luxury destination wellness resort combined with a broad acreage certified organic farm, a residential community, and a local village with a school. And it basically brings all of those components together around a new hospitality brand. This is our first location here in Costa Rica, but the intention, and we'll talk a little bit more about that, is to bring this brand and open up locations around the world. And we're really focused in this area because we're meeting people's growing demand for wellness in how they, not only how they travel, but how they live, the food that they eat, the water that they drink. And so we're positioning a hospitality brand to meet that demand. And so how do we do that? The first was to find a location. And so we found this gorgeous location here in Costa Rica. It's 800 acres. It's outlined there in red. It has its own airstrip. It's a 20-minute flight from the international airport. It has year-round eternal spring-like temperatures and optimal growing conditions for all the agricultural components that we've put in place. And so the location for our first property was really important. Costa Rica checked off a lot of boxes in terms of currency stability, political stability, high literacy rate, accessibility to the United States, climate, as we said, lower construction costs, lower property costs, all a reputation for conservation and wellness travel. All of these elements came together and were factors in choosing this location, and it truly is just an amazing location. We're so excited to have found it. We broke the property or the project into 3 phases. Phase A was the purchase of the property and entitling the land to do all these elements that we would like. You can imagine how hard that would be in the US to buy a piece of land that you had zoned for a hotel, residences, a farm, a school. It would be nearly impossible, and certainly in California. So purchasing the property and then going through that entitlement process was a major part of unlocking value in this property and in the project and in phase A. And we were also preparing for receiving future guests and home buyers. And so what we realized is if we're going to sell a lot of homes here, we need a place for those potential home buyers to come, to be immersed into this experience, to have over-the-top food and beverage experience, a connection to nature, sense of adventure, whether they're going to the waterfalls or zip lining or whitewater rafting, mountain biking, you name it. And so we needed a place to bring those people together. And so we created Kinkara. And Kinkara is a glamping retreat that is open to anybody to come and visit. But really for us as a project, it also serves as our in-house sales office. So that was, and we'll talk a little bit more about Kinkara later. The next phase is the residential home development, and that's what we're at right now, is raising funds and capital to execute that phase while simultaneously keeping phase C in sight, because that's going to follow right after as we launch the residential phase. It's not It's not we're going to complete the homes and then do the wellness resort. The wellness resort will start months or so after we've started the residential development. So at this time, we're accepting new investment into the project, and I'm going to briefly just talk about the structure before we get into some more details about the project. RWN, the Real Wealth Network, has formed an LLC called RWN Costa Rica Investors LLC, and that entity is the one that is investing in the project. And so the project pays that entity a 15% preferred return and 45% of the residual profits, assuming that the offering is fully subscribed. So that is the pool, the source of the pool of money, distributions that will come to RWN Costa Rica investors. And within that Real Wealth Network formed entity, there are two classes. And there is a priority loan class or private loan class, as well as equity. And Real Wealth Network really created that so that not only could individual investors participate, but people could use their IRA funds to invest. The private loan option is a way for you to invest in the project and get equity-like returns by using your IRA. And the equity investors is open really to individual investors. Individual investors can also do the private loan, but it creates an opportunity for two different types of investment. So it created just a simple organization chart here. The property here is owned by a Costa Rican corporation. And then there's Rise CR is the US-based LLC that owns that corporation. And then you can see that RWN Costa Rica has invested in that master LLC. We also have some non-RWN investors that have invested in that, and as well as myself. And then you can see how the RWN LLC is then split into those two classes of investors. So let's talk about those two different ways to participate. With the private loan, you are loaning money to RWN Costa Rica investors to then invest into the project. So you are not loaning money directly to the project, with as collateralized by the land. It is really you're loaning money to RWN Costa Rica investors, and then they are investing that money in the equity of the project. And so, like I said, that's a great option for IRA investors. It has a slightly shorter timeline and a fixed return. You basically are earning 18% simple interest on your money, and that equates to a 16.8% IRR. If you're familiar with IRR, internal rate of return, it's a compounded measure. And so if you're accruing 18% a year over 3 years on an IRR basis, that's about 16.8%. The equity units have a higher IRR, or higher projected IRR, and a longer timeline because their repayment comes after the private loan units are paid off. So of the cash flows that come to RWN Costa Rica investors, they first go to the private loan units to pay off their principal and all outstanding interest. And then the rest of all the cash flows from there on in goes to the equity units. And so that's why there's a higher IRR there, because there's projected to be larger proceeds and there's an unlimited upside in that investment. But there is a little bit of risk, higher risk, because you're not getting your capital return until the private loan units have had all of their dollars returned. As Kathy mentioned previously, this investment is unfortunately only open to accredited investors. And those are investors with a net worth of $1 million, not including their home, or $200,000 a year in income, or $300,000 for a couple, and you have to get verified of that status. and that's just a rule the SEC really places on us. We wish we could accept everybody, but we have to abide by those standards. So I've given you just a very brief overview of the project and where it's intentioned around well-being, around wellness travel, about well-being living. You can see all of the major hospitality companies existing, from Starwood to Hyatt to Hilton, all positioning themselves around a focus on wellness and well-being. Hyatt bought Miraval, which is a wellness resort. They also bought Exhale. And all of these hospitality brands are trying to position themselves to capitalize on this trend, or not trend, I would say shift in how people travel. But nothing has been purpose built for it, and so that's where we see the opportunity is to capture all of these important elements and build them into a brand new hospitality brand. I'm going to share with you some regional developments and what I call economic tailwinds. When we look to develop a new project, you look at all the ways you can win, and one of them is a rising tide. And so you'd like to go into an area that you believe is undervalued, and that as you develop your project will start to become acknowledged as a great place to be, and all of a sudden development starts to increase and your property values increase irregardless of whether you've done the project or not. And the valley that we are in, called the Valle General, is that place for me. It is a unique place within Costa Rica. It's our property sits at the foothills of the Talamanca Mountains. Think of like Boulder to Denver, and in terms of accessibility to a local city, it's that kind of arrangement. And so San Isidro is that city that is growing, and it's been declared a special economic zone. And the representatives from that agency met with us. Because they had heard a lot about our project. We employ 85 people here already, and advise us that they would like to name RISE a project in the public interest, and that's an official designation that comes with a lot of benefits. And even almost immediately after our meeting, some permits that we had been waiting for got approved, and we'll talk a little bit more about that in a moment. But that's huge, and to have those types of incentives and special consideration just helps out a lot. One of those elements is road infrastructure. We were desiring some improvements on the road, and about 2 days after our meeting, I took some pictures because this couple of pieces of heavy machinery and some more down the road showed up in an army of dump trucks. And so all of a sudden our road for about a mile, that sort of last mile that wasn't paved was getting taken care of, and that was really outstanding. They also advised us that they're putting in a brand new road that starts near our property that will be a very direct road to the beach, that will cut the travel time from about an hour and 10 minutes to about 35 minutes. And that's really a boon for us and for the whole valley. So that was an exciting development. Another one that is a real potential game changer is the airport. This, as I said, this is a special economic zone, and there is an application to put a new airport in the valley. That would be a Category 3C that would accept international arrivals from the United States. I can't tell you how much this would catalyze real estate values here to have those arrivals, and they feel really positive about the probability of approval from the Ministry of Civil Aviation. This is a few years out for sure, but if this continues to gain that momentum, the real estate market is going to start to adjust ahead of time. I asked them point blank if upon approval with the Ministry of Civil Aviation, What are we looking at probability wise on the airport? And they said 50%. And then that goes up dramatically once they lock down the financing. But this could be a real catalyst and another what I'll call economic tailwind for the area. Some more anecdotal evidence. This may not sound like a big deal for those of us in the United States, but in this valley, Walmart just started construction of a Class A facility here. And it's really just evidence of how major corporations are starting to sort of see what we've all seen here, is that the untapped potential of this valley and positioning themselves to benefit from it. In addition, it's a nice go-to place that expats who are living abroad know they can get odds and ends things with a name that they recognize. But I feel like Walmart is just the first, and there's going to be a lot more starting to come into the valley as well. A little more about, I guess, some on-site progress. You know, one of the things that is really important to us in the community is chemical-free water. We currently have 8 water connections to the property that is sourced from up in the mountains. But we decided to go one step further and drill wells on our property, both for the residential community and for the hotel. And this is the actual drill rig that is there. This is another permit that we've been waiting about 8 months for, that 3 days after meeting with the Special Economic Zone Committee was approved. So it was great, and it's nice to have that work underway. The next process is to get the flow rate tested. We know there's abundant water there, and get that up and running, but that's some exciting work there. I'd also encourage everybody to go to Kinkara.com, where you'll see a lot of beautiful photographs and of what people can experience right now. We opened up Kinkara, like I said, as sort of a pseudo sales office, but also to allow groups to run retreats here. We've since gotten all the permits needed to accept transient individual guests. And so starting June 1st, we're doing that. We are part of a collection of 5-star award-winning hotels called the Cayuga Collection. And so just for our glamping hotel to be included in a collection of hotels that, you know, charge $500, $600, $700 a night is really amazing. And you can, if you want to read a little bit more about what people's experiences have been, I would encourage you to go to TripAdvisor and read the reviews that we have there. They're really outstanding. And this Kinkara really is an immersion, and the Real Wealth Network has brought 2 groups down here. It's been absolutely extraordinary. I can't wait for the next one to come down. We have an amazing time, and it's a wonderful way to get to know and feel and truly experience what this offering, what this invitation is like to our future guests and our future residents. And so you can check that out a little bit more at Kinkara.com. One thing that's actually ongoing, actually, these are some people from RWN, and one of those, Josh, is, I think, going to come down here and intern in about 3 weeks. This is another small part of the project, but really fun and impactful. We have an amazing wood shop that we have on site to make our own furniture. And right now, as we speak, Hal Taylor is there training up our staff even more to make these exquisite rocking chairs. And say, well, what's the importance of making a rocking chair? And it's because going through that process up levels the skill set of our carpenters beyond belief, and also is a revenue source for the wood shop itself. The wood shop is there to take advantage of future opportunities to make furniture for our home buyers and for Kinkara, and for things like millwork, doors and windows, other items that we'll need in the construction process. And so this has been really fun to have Hal down here. Basically, inspiring our team to look at what they do as a work of art, and everybody from RWN who sat in those chairs was just blown away by it. Looks like it's carved out of a block of wood, and it was just an extraordinary experience for everybody. Going to get into the capitalization of the project. Currently, for Phase B, RWN has raised almost $4.5 million, and they're continuing to receive investment in both equity and priority loans. But we've been approached by other groups and been seeking out other groups to bring the entirety of this project to life, and gotten a lot of recent traction with that, and very recent, even more so. And I'm going to touch on that right here. The first partner we've identified and have extensive discussions with has been here 3 times, and they are an institutional partner with an extensive background in residential and hospitality development, brand development. They are eager to build out locations 2, 3, 4, and 5. It's why they're in this. They said they would not be interested if it was just a one-off deal. And they are also committed to investing all the equity that's needed, not just for the residential, but for the hotel as well. And they have deep capital sources. And I can say that as of 2 days ago, we have an executed term sheet with them. And so that's really an amazing step. They're coming again for a 4th time in 2 weeks, where I'll be meeting them here. And so it's an exciting time to be part of the project as we go from closing out the financing part to all about execution. That term sheet has some limited exclusivity provisions for them, but it does not prevent us from negotiating and engaging with partners that we have already been in talks with. And so as a, belt and suspenders kind of guy, we are continuing those discussions, and we'll make the decision that's very best for the project. Partner number 2 is a multi-billion-dollar family office from the pharmaceutical industry, very experienced real estate investors as well. And they too want to contribute equity for both the residential phase and the hotel phase. They would desire a little less in terms of decision making within the project, but still a rock solid partner. Partner number 3 is a multi-billionaire entrepreneur, and he had 2 businesses. One he exited. The other he still retains ownership of. And he philosophy-wise, he's a wonderful match for us. He's an older gentleman, he's about 72, 73 years old, and he wants to make an impact on this world with all the resources that he has, and continue to create beautiful things. And so he's also a possibility. Initially, he'd be focused mostly on the residential, but would consider the hotel as we approach that as well. The last partner is strictly an opportunity with partner number 4. They are more strictly financially motivated, and they see a potential to make some money and invest in a solid project, and so they're an option as well. Like I said, we've executed the term sheet with partner number 1. There are, benefits and drawbacks to each situation. Like I said, some want to do both phases, while some are just, initial phase. Some want more control, less control. And so weighing out and making sure that we make the best decisions for the project and our existing investors is an important step. And so that will be ongoing as we navigate these final steps of the capitalization. Here are the most recent financial projections for the project for this phase. The priority loan obviously has a fixed interest rate and fixed return, so the IRR won't really fluctuate that much or at all, really. It's at a 16.9%, and the equity is right around 25%. those are approximations, and there's no guarantee of future returns, but based on the best assumptions that we have right now. And I've been also working with Lenora Langham, who's contributed a lot in support of the financials and in presenting and analyzing these for your investment as well. And this is the picture that we have for the project right now, given where we stand. So what are the next steps for us? We like I said, we're nearing what I would say closing out the capitalization phase, and so we're encouraging and all investors to come on in at this time, and with an offer for 3 free nights at the resort for each $50,000 of investment that comes in. And I mean, I love that, just because so far having everybody here has just been such a treat for me, and getting to connect with you all. And I view RWN and their investors as a founders club. Without the support of you all, we wouldn't be where we are. And it's in a wonderful place, and it just brings me a lot of personal joy to see everybody having such a great experience here. Like I said, we've been doing site tours every few months, maybe every 6 or so months, and I know there aren't dates set up for the next one yet, but even if whether there's a site tour or not, just reach out and come on down. I'm here, as you can imagine, quite a lot, and I really enjoy engaging one-on-one with you all and taking you around. So if I am here, I would absolutely set aside all the time necessary to get anybody comfortable who'd like to come and see the project in person first. Here's some of the RWN members resting, doing a little yoga exercises, maybe after yoga exercises, and seeing some farm and water elements. It was just a lot of fun to have the group down. All the offering documents are online, and in a follow-up email with the recording of this webinar, Maggie's going to be including a link to a PDF that has a really beautiful, extensive look at the elements of the project, and the financials are all in here, but in terms of the intention and the positioning and the identity of this brand, this project, and where we're going, it's a really amazing document, and I think it will help illuminate why we think we're not only well positioned with this brand, but well positioned with this location in particular. So all the information there is on the website. So at this point, if I'd love to open it up to any questions that you all might have. You can type them in, and Kathy or Jill will dictate them to me. So thank you all very much.
Yeah, thank you, David. Thank you. There's one question: how do I become an accredited investor? For this, the way this is filed with the SEC, you just have to prove that you either earn $200,000 if you're single, or $300,000 if you're married, together combined, or you have $1 million net worth excluding your home equity. So you either are or you are not accredited. That's all there is to it. The SEC just assumes if you meet those standards, then you qualify. They also want to make sure that you understand the investment. So there's a questionnaire you fill out before investing. But to prove that, we either just need a W-2 just to show your income, or you can go to verifyinvestor.com, fill out the questions, and then they print out the verification. You can give that to us if you go the net worth route to prove that you have $1 million net worth. So again, or you can have a CPA or your attorney write a letter saying that you do meet those standards. Again, which is, it's pretty simple with the SEC. They just want to see that you are not putting your last dollar into this. They want to know that you have money if this doesn't go as planned. So that's all what it takes. You just need proof that, again, you either 300,000 as a couple or $1 million net worth. Question about the location. It seems, someone said it seems hard to access, and is it hard to get on that flight, and how do you get there?
So you fly into San Jose, Costa Rica, which is the capital city, and it's about a 20-minute flight to our property. Now, you can fly directly onto our property. We have planes that can bring you here, or you can take the commercial flight, which is also a 25-minute flight to San Isidro, which is 20 minutes away by car. And so there are commercial flights on Sansa Airlines that can be arranged. And so those are the two ways to fly. Those are the routes I prefer. If you're going to drive, it's about a 4-hour drive. It's a beautiful mountain drive, but it does take a little bit longer. But the location, this valley is just exquisite, and the accessibility options just keep improving and improving every day.
Yeah, Rich and I drove the first time, and it was a beautiful drive. It's windy roads, so you have to be prepared for that, but it is really breathtaking. We flew this last time, and that was even more breathtaking. So either way. Let's see. What is the competition like? So who else is doing this kind of eco resort, and how might it affect this project?
Yeah, so there's a resort about 20 minutes away called Alta Gracia, and it's actually owned by the former owner of this property. His name's Alberto Esquivel. He's been a huge supporter of our project and has helped out tremendously. It would be the most direct competition. I would liken Alta Gracia more to a Four Seasons type of market. They're and it's a reflection of Alberto's own taste, that is luxury is defined by abundant space. I think the smallest room there is 1,100 square feet. And so that is a nearby competitor. They're just attracting a very different, I would say, type of clientele. I'll also say that just sort of around the globe, I mentioned that hospitality companies are repositioning themselves for around wellness. And so, but it's almost like they're playing catch up with properties that were not built to address this type of market. So locally within the country, there's not a lot of competition for the product that we are bringing to market, because there's just not a ton of it around even the world. There's the smaller retreat locations, highly specialized, but not more of a wellness brand. I suppose you could think of Canyon Ranch. They've been around for 35 years. I think that brand feels a little bit dated. Miraval, that Hyatt bought, is probably the closest to the brand that we're creating. And so to me, there's a lot of room to play in this space as people allocate their travel dollars to wellness travel.
All right. Let's see. Is RWN involved in the hotel or residential or both, and what percentage split between them?
So this offering is related to the residential. As we navigate through with our other new equity partner, there will likely be opportunity for RWN members to participate in the hotel phase as well. But the financials and what is being presented here is strictly for the residential phase. But like I said, I can't say we don't have definitive agreements, but there will be options. I believe that we'll be able to create options for RWN within the hotel as well, and possibly without further capital contribution, without further out-of-pocket capital contribution. So that's something that we're looking at, and hope to give each investor the option at that time if they desire to own both pieces.
Okay, another question. When does the Phase B clock start for that 3 and 4 year return?
So when we close the investment, so that would be when we close with this RWN and the financial partner. So I'd estimate that to be in around three to 4 months, based on due diligence period and then the legal docs drafting.
Okay. Someone asked what phase they were in. They invested last year. I'm assuming that is Phase B. But definitely reach out and to Maggie at realwealthnetwork.com to confirm.
I should also mention something. Sorry, we'll follow up to that. Like the timelines there for a full exit from the project. Distributions will start before those periods, those 3 or 4 year. I don't have the exact numbers in front of me, but it might be 20 something months when capital starts to get returned, and so those periods are over for the life of the investment, not just the initial capital returns.
Okay. Is there yearly cash flow? No, there is not on this project.
Correct.
But like you said, yeah, this is a development project, so funds are going to develop it and then sell, at which point you get your capital and your return back. If you are looking for yearly cash flow, then we do have some, or regular cash flow, then there's other projects for you for that. Private loan, what is used as collateral?
So
it's a loan to the entity, so it's, yeah.
Right. So it's a great question, and I just want to make that clear. So you're not loaning money to the project and with land as collateral. You can think of it more as a company loan. You're loaning money to a company, RWN Costa Rica Investors LLC, that is then using your dollars to invest into the equity of the project. And then based on the cash flows that come out of the project to RWN Costa Rica investors, they then pay off the company loan first, principal and interest, and then the money goes, the balance of all proceeds goes to the equity owners of that company, RWN Costa Rica investors. So it's a loan to an entity that Real Wealth has created for the investment into this project.
Yeah, if you are looking for a very traditional note where you're investing as a bank and you're secured in first lien position, we do have a project for you. Actually, it's an 8% return, and the LTV is like 30% or something, very, very low LTV, 8%. On just a regular loan that's a note that's recorded at title, secured in first lien position. Very, very, very conservative investment with still a pretty good return at 8%. With this, it is not secured, so in the same way, although the entity owns quite a large portion of this project. So the project's going well, and there's that kind of security. But again, that's why the rate is higher. You're never going to get a 16% interest on or preferred return on a note that's secured in first lien position at a low LTV, because you don't have to. Someone can pay you 4%, and it's that's what banks are happy to get. So that's kind of the difference. But if you are looking for that highly conservative loan, we have that for you. Just reach out to me, maybe directly at Kathy at realwealthnetwork.com. If you are, again, looking for the higher return and we structured it this way really for our self-directed IRA investors, because when you invest in a bus as an equity investor, your IRA could be taxed. If you're investing with your self-directed IRA, it could trigger UBIT, which is unrelated business income tax, because your IRA is investing in an active business versus passive. And that tax can be pretty high depending on your tax bracket. It can be almost 50% tax on the profits, which if it's a 25% return, well, you get taxed on half of that, then you're only really getting 12%, right? So that's why we set it up as a private loan in this entity, so it could be hopefully treated differently during tax time. Again, always check with your own CPA on that, and always submit the operating agreement and the PPM to your CPA so that they can interpret it for your specific situation, because it literally is different for everybody. Somebody said, thanks for the 3 free nights. We really pushed for that because we think it's important for you to go and experience it. The sooner the better. Everyone who's gone out has been more impressed than even the pictures show, myself included. I went there when it was dirt. I went back and there's still a lot of dirt. There's a lot of land. It's like a whole village. It's just massive. But the parts that are now developed, it's just pretty mind blowing. So, this is really to encourage you to get out there and see it for yourself so you can feel really good about the investment. What is the minimum price for residential that you're projecting, and when will it be on sale? Now, yeah, if you're not an accredited investor and just want to buy a home, you don't have to be accredited to do that. You just have to be able to buy the home. So what kind of price points are we talking about, David, for the different? Yeah.
We have a couple of different options. We have what we call the micro home area. We have our signature residences, and we have what we call branded residences. The micro home are smaller 550 to 750 square foot homes that would be in the 150,000 to 250,000 range, somewhere in there. Then we have our signature residences, which range from about 500,000 up to 1.1 million. Those are larger residences, 2, 3, 4, even 5 bedroom residences. And so we're envisioning a lot of not only second home buyers there, but people permanently moving here, like myself and my family. And the last is the branded residences. Those are actually, I'll call them glorified hotel rooms. They're part of the hotel phase. They'll be around 400 to 500,000, and those residences go into the rental pool, the hotel rental pool, when they're not being used. So if you're somebody that might come down for a month or two out of the year and you'd like to generate revenue, the hotel to generate revenue for you, you'd put that room in the room pool. So 3 different types of homes across the spectrum from, over 100,000 to slightly over $1 million.
Okay. Let's see. Once completed, this project is likely to receive many acquisition overtures. Can you comment on what we might expect to happen in this case? I'm not really quite sure I understand the question, but
I think I do. I would expect that to be more of the brand. so not only they're saying, okay, we love what you've created there. We see that you're creating locations 2, 3, and 4. We want the brand, and I'm probably referencing that a lot of the larger hotel companies are buying smaller brands, and so I suppose the idea for me is to execute this project in a way that maximizes the philosophy and intentions of the project, while also building amazing shareholder or investor value. So if we get an offer that whether it's through joint partnership or otherwise, we'd certainly listen to it. But really, we're looking to just maximize our investor returns, while also staying true to our philosophy and what we believe will build that highly valuable brand.
Okay. Someone had a question about timeline, and I think we went over that already. Investors in the private loan can expect about 3 years from the time that we close with the loan, and the equity investors 4 years. But again, development projects timelines can change, but that is currently the projected timeline. Is the gain from this investment subject to capital gain tax?
So We have looked at this a lot, but I'll reiterate what Kathy has said about always checking with your advisor. The income or the distributions from the Costa Rica entity, which is a corporation, will be in the form of dividend income. So it will not be taxed as capital gains. But there are some, since that money will have already been taxed in Costa Rica as well, there's the opportunity for tax credits for what has already been paid on your behalf. And it depends a lot on each person's individual portfolio. International real estate investing is a wonderful way to diversify one's portfolio. I would reiterate what Kathy would say. It's not meant for 90% of your investable assets. Diversification, it's meant for a smaller portion, and so right sizing your investment is really one of the most important things you can do when diversifying your portfolio. And that comes from just my own personal experience in real estate investing, but also I had a career on Wall Street for 10 years as well, and I would have said the same thing there.
Yeah, we have a lot of investors who love this project because it is offering some diversification given some of the things going on and the uncertainties at home here. All right, is there upside potential, or I guess really the question is, what's the benefit to doing the loan versus the equity option? Probably the biggest benefit with the loan is if you are private, if you are investing with your self-directed IRA, the loan option probably is better for you depending on what you might pay in UBIT. So again, talk to your CPA about that. The equity option, also the loan gets paid first, and then the profits are split among the equity investors. So the bottom line is really, if the project goes better than expected, equity investors make more. If the project doesn't, then equity investors could potentially make less. So that would be, again, one of the reasons why I think it's really important to go out and see the project for yourself to determine if you think this is going to go better than expected. And based on so many, I mean, here's my personal opinion on it. And David, I don't know how much you went into this, but you have kind of powerful people on your side and who are developing nearby, who would kind of like to see some of these things happen, the airport and so forth. So there's kind of an in developing the city nearby. If those things happen, that's going to be real good for the equity investors. Really, really good. If they don't for some reason, it'll still be a good investment. But there could be an even bigger pop if this is already one of the fastest growing areas of Costa Rica. Any thoughts on that, David?
Yes, you're right. It is one of the fastest growing areas in Costa Rica. There is a lot of incentive and a lot of support from not only the government, but from wealthy individuals here and influential individuals here in the Valley. The mayor has been over here quite a few times. And so there's a lot of incentive and support we have around this project and this Valley in general. And I think you sort of hit it on the head there that the difference one of the differences between those loan investors and equity is sort of one's own risk tolerance level and benefit. There's potentially higher benefits for the equity, but the private loan is an amazing option with a great return also, and that is in a priority position within the RWN LLC. So I think it really comes down to one's own financial goals and timelines and risk tolerance levels and all of that. But from a big picture scenario, what's going and how this is playing out in the Valley as a rising tide for the whole project, it's amazing. Yeah.
Yeah, so somebody asked, I think in light of that, if I invested $50,000 as the minimum investment, could I do 25,000 in the loan and 25,000 in the equity. And yes, I don't see why not.
Correct.
Yeah. At the end, in fact, I think quite a few people have done that. 4 years as an equity investor, do I retain equity or just get a distribution? Any options to retain equity if the project does well?
So in the residential environment,
Did you hear that, David?
Yes, I did. The residential phase, I think they're asking about at the end of the 4 years, what do I own? So think of it as a house. You build a house, you sell it. It's the end of the if it were, whether it's one house or 150 houses, there's no more there's no more business activity. So that's on the residential side. Obviously, on the hotel side, it's a different story. You have an ongoing business, operating business. So like I said, there may be the opportunity, depending on how we structure, what we can structure with this other new equity partner, for RWN members to participate in the hotel phase as well. I think there's a very good chance of that, better than a very good chance. And so in that circumstance, you would sort of have the residential phase come to an end, but part of your investment or any additional investment that you might make in the hotel would have that perpetual nature to it. And just to give you a brief, typically for a hotel, obviously all the capital comes in, you build it, and then you operate to a point in time, called stabilization. And that really means like maybe you're getting it up to the occupancy rate and average daily rate where you think you're likely gonna stay and have stabilized the property. At that point, you then recapitalize the project and replace the construction loan with a permanent loan. And oftentimes there's a distribution there. And then the ongoing profits on an annual basis would be distributed to those investors that continue to own the property. So a little bit of a different scenario when you have a finite, residential development versus an ongoing, commercial enterprise. Hope that helps clarify things.
Can the microhomes be rented out? And if so, how much rent can we get?
Well, the market would tell us how much rent, but there will be some restrictions on rentals, and they may adjust a little bit for whether it's a signature home or micro home. But in general, what we're trying to create here is a community, and so people with families sometimes feel nervous about new people coming into a community on a very regular basis. I'm talking like Airbnb. So a restriction might be you can't Airbnb it. You can rent it out for a minimum of 1 month lease or 2 month lease or something like that, so that you could generate some income from the micro homes. But it's possible if you're looking for that, if the income generation piece is really important to you, the branded residences where the hotel is specifically designated to rent out your property and maximize the revenue generation might be a better option in that department.
Okay. Do we need to deal with Costa Rica tax?
No. So we will be paying the corporate tax, and you will be getting a distribution, a dividend distribution. Think of it sort of the same way as maybe you own Verizon stock, and Verizon will have paid a corporate tax on for their business already prior to making any distributions to you. And so you're not subject to that corporate tax. You're just paying tax on that income on an individual basis. It's similar with Costa Rica. So we will be handling the corporate tax and then making a distribution to our partners. Now, that being said, depending on one's financial profile and investments, there could be opportunities for you to claim a credit for that corporate tax that we have paid, but it won't ever be that you owe additional tax in Costa Rica or anything like that.
Okay. What's your risk in terms of Costa Rica political and economic environment? Is political stability of Central America a concern?
So Costa Rica, one of the reasons we chose Costa Rica was for its political stability, its currency stability. I did look at a property in Nicaragua, 5 years ago, and it was less expensive, just as gorgeous, and supposedly all Nicaragua's problems were behind them, safest place in Central America, all that jazz. But to me, Nicaragua still did have political risk. And, that showed its head, a year ago, and most hotels were shut down. There's even one called Macul, built by Carlos Pellis, the multi-billionaire, and beautiful place, and the place has still been shut down. So choosing where you go into the country is which country you go into is important. And I'll bring up like a point of reference about September of last year, maybe 9 months ago. Costa Rica was passing through some tax reforms that increased taxes, and basically did some, I wouldn't call it union busting, but something sort of similar. And it was a very challenging environment. But there were no shots fired. There was no violent protest. There was tension and expression of those tensions. But how it was really amazing to me that that's how it gets resolved, in a peaceful way, not with violence. And so that was a important litmus test, really, and just affirmation of how Costa Rica handles its political problems. The motto here is Pura Vida, which means pure life, and that is really embraced by all of the citizens here, and it makes it it's one thing that contributes to the safety of the country. Other things that contribute a lot are high per capita income, high literacy rates, American companies coming in and giving jobs like Amazon and Intel, and so that keeps crime low, it keeps poverty low, which makes this country safer and more stable. So you really like taking all of those factors into account as to why a country is thriving as well as Costa Rica. They have no standing army, so they devote their government revenues towards things like conservation and improving infrastructure. And you can see that when you go around San Jose and you go around this country, that it's really a beacon of stability for the area.
And I believe there's some kind of agreement between the U.S. You may have already mentioned this, between the U.S. and Costa Rica, that the U.S. protects Costa Rica. Do you know any details on that?
I don't know the exact, language of that, but there is sort of some bilateral agreements sort of in place, and there's a good relationship between Costa Rica and the United States, and it's just getting stronger as this country continues to get stronger, and as so many U.S. residents choose to vacation in Costa Rica. I mean, it just comes up over and over and over again. It's amazing because it's a wonderful country to come visit.
Yeah, I'll look up the actual agreement and get that out to the listeners today, because I think that's really important to understand. Costa Rica does not have an army, and that I think part of the reason is it's protected by us. So I'll find that information. Let's see, I already asked that one. So will I have to file a tax return in Costa Rica?
No, you will not. I will qualify that by saying please check with your accountant. But I'm, you know, Lenora from RWN is incredibly knowledgeable on this, and we have researched this together and with Costa Rica Council, and so you will not have to file a Costa Rica income tax return.
Okay. I think somebody is asking about rolling capital into another opportunity within RISE. I think we should just answer that directly because it just depends on whether you're in phase A or phase B. A lot of investors rolled their phase A investment into phase B. Some did not. If you're in phase A and you have questions, just reach out directly to us at Kathy@realwealthnetwork.com or Maggie. We can set up a time to address your personal question because it may be different than somebody else's answer. Let's see, how many units projected to be sold by month?
So I think you're talking about the absorption rate
I think so.
for the
Yeah, I think
homes.
that's the question.
I don't have that exact number in front of me. I think we're looking at two or 3 units a month, but I'd have to look at that and also see the combination between the micro homes and the signature homes. But I believe it's around 3 or so units a month, somewhere in there.
Well, I can just tell you from the feedback we've received of investors in the project and people who were not accredited but wanted to be in the project, there's tremendous interest in these homes, especially, of course, the micro homes for people who want to have a second home somewhere else, maybe outside the country in a beautiful place like this. So just from real wealth interest alone, there's going to be, I think, a lot of people who want to invest, own a home there.
Yeah.
So that's it on the questions. If you have one, send it in right now because we're about to wrap up. But David, thank you again. If you do have more questions or you want to talk to David, he is coming to our upcoming event in July. That's right. You're able to make that one, David?
Yes, I can't wait. I'll be there. Happy to meet everybody in person. It's be my treat.
Awesome. And then I know that I think you've got a photographer coming out. We were hoping to get some updated pictures and just get some video of what's going on there. I know I took some when Maggie and I went out for the last tour that we can share as well so people can get a better idea of what's going on. And then hopefully we'll have a tour scheduled and on the books that we can announce at that event. If anybody has a specific date you're thinking about going out, then just please let us know and maybe we can schedule the tour around that. I haven't just incredibly packed few months, so I haven't. I'm not sure when I can get out, but as David knows, we have a pretty well-known. It depends on what you watch on TV and which movies you go to, but a Hollywood actor who wants to come out real soon and potentially invest in. So I'm thinking about going out with them. So we just need to nail down those dates. But anyway, Saturday, July 13th and in San Mateo, Sunday the 14th in LA. We'll have David there to answer more questions. We'll also be featuring new properties in Florida, Jacksonville and surrounding areas. Birmingham would be renovated properties, and Dallas new and renovated. That you can find out more about all of that at our July event. And then as I mentioned earlier, we have our Eastern United States event on Saturday, August 10th in Cleveland, Ohio. And almost every affiliate, 15 teams are coming out all in one day. It's crazy. It's like each affiliate gets 20 minutes max to talk, maybe 30 because there's so many, but it's a great way if you just wanted to meet everybody in one day and also see the Cleveland market. These Eastern Coast events have been really popular, especially since a lot of our members live over there, and it's a lot easier maybe to get to Cleveland than out to California. So you can find details about that on our website at realwealthnetwork.com under the Learn tab. So thanks again, everybody. Such great questions. We love it. I love public forum so that everyone gets the benefit of hearing the answer, because oftentimes someone will ask a question that someone else would never even have thought to ask. So it's a great way to share that information. So once again, thank you all for your questions. David, thank you for finding this project and bringing it to us and keeping it, so awesome.
Thanks so much, Kathy. My pleasure, and look forward to seeing everybody soon.
All right. Have a great rest of your day, everyone. Talk to you soon. Bye-bye.